What's up, gang? Today we're gonna go through after hours, outside of trading hours, journaling session because I gotta journal my trades from today. We'll see how quick we can do it. Yeah. Got a Go-Gurt going on here. Cheers. Alright, let's review. So we took L's today, but let's see if anything went wrong. Let's go through our executions. First, we got Amazon short. So I trade the market open on the 2-minute chart. I'm out here drawing the Fab 4. What's the Fab 4? The 200, the last point that 200 is at before the market opens, the 20. So look, right here, the 20, the previous day close, which is marked by the dashed line, and then you look back about 30-45 minutes into the past day, you mark the session's high and low. Then out of those 4 points, you get the highs and lows. So this is the 200 and the session's low here. And there, that's how you get this box extended out. So right off the bat, this thing is popping, originating right off the bottom of the Fab 4. That's -1 position, right underneath the Fab 4. So I'm looking for any sign to go short. I get this elephant bar right here. So let's name it. We got in at 36.37. So I'm in at relatively the lows of this thing, one lot. I go one lot because I'm in at the lows. I can't afford two. My stop is event on top. So name elephant bar plus anticipation entry. So I'm jumping into this bar. You got position, which is -1, right below the Fab 4. And how's the risk on that? 36.37. Top of the bar means I have to have my stop 1 cent above the high, which is 127.21. My entry is 136. Wait, what the? 137.21, yeah. And my entry is 136.37. So that means, oh yeah, my max loss per trade is -$100. So this trade would have lost me about 63 plus 21. Do the quick maths. 84. It's below this dollar loss amount though, so the risk is good. Let's erase this. So you know, next thing I'm looking for is an add. I get this green bar right here. So I'm adding 2 at 34.30 at around 136.5. 136.5. Yeah. I'm adding 2 here, so now I have 3 lots on. Let me calculate the average price. $136.46. So that means now that my max loss can be only 33 cents away because I have 3 lots on. And if I lose 33 cents on each lot, that's minus $99. So my stop could be at 79, which is my downfall because that ad again was too heavy. First of all, if I wanted to add, I should add to where I'm able to put my stop above whatever I enter on. So I entered on this color change, takeout, put in green, wiped out by red. In hindsight, it gets wiped out anyways, but which would have resulted in losses like either way. But the ad was just too heavy because I ended up getting out at 74 for basically a max loss, right? What was it? 5 cents off a max, 5 cents off. So I saved like 15 bucks, I think. 15 bucks on a what was it? 79 minus 74, 5 cents. Yeah. 15, 16. So I believe my loss was $84 on this trade. So, oh shoot. Let's mark up my stop adjustments. $74, like here. Look how tight that stop gets because I miscalculated the ad. 74, 74, around there, maybe a bit higher, there. So, no. Okay, there we go. My bad for the yelling. Move the stop down. Let's show the wick. Move the stop down, and I get stopped out. But guys, let's get this in the journal. Okay, let's journal what went wrong. Let me finish this up real quick, and we'll get to work. All right, let's get to work. Ad was a bit too heavy, and the only way to reduce risk is to drag it down super tight. This leads the trade to be less probable, more prone to stop out. Ad could have benefited from having its own stop separate. Is that how you spell separate? From that initial entry. So what do I mean by that? Check this out. Check this out, y'all. So y'all know how I entered one here, stop here. It never got stopped out until here, but like I could have capitalized on catching that and taking profits down there. But since I moved all my stops together all at once, I get stopped out of the whole move, and if I wanted to get back in, I'd have to re-enter. So my re-entry game would have to be super good. So what I mean is, if I added here, I should have had two separate stops, one for the one lot here and one for the two lots I added here. But I don't think it should have even been two lots. Like, calculate this bar. The range is 42 cents. Yeah, that's a bit too much risk to add. One lot on there would have been enough. And as you can see from this wick, you got a double dip. What does that mean? Popped up, popped down, didn't close below yet, came back up for another dip, hit that double dip on you, yoit, and then it triggers again. But if you had one stop here, you would have stopped out one here. Perfect. It sets up again, add again, stop over the top. This time it goes, comes in for new lows. You're taking profit down here and into this whole number 136. Yeah, so just be careful on the ads, really. Calculate it better. What was it? Calculate ads better so that you don't have to reduce risk in a stupid manner to a stupid location with stupid probability. And then what we got? Anyways, if I stopped out, this is what happened. I went to trade something else, but there's a clear and obvious re-entry. After this wicks you out, this sets up, boom, boom. It sets up perfectly. Like, with the $100 risk, this bar is about a 26-cent bar plus 2, 28. Yeah, that's a 3-lotter right there. 3-lotter. So, and this one goes like 2 to 1. On these ones, you would have lost about 1 R. This one, you're making like 2 R's to the whole number. So you'd actually be up 1 R if your re-entry game was real strong. So basically, don't trade too many stocks at once. Keep focus and be patient for another setup if it barely nicks you out. Obviously, it's different if it stopped you out with violence. This isn't violence though. I mean, actually, it looks pretty violent, but in hindsight, or after the bar closed, you could tell, like, look, this bar at the highs was a full green bar, right? Like that. Like, that's a pretty sizable green bar. But like, you could tell, you could read the bar once it closes. Like, this literally gave up all that. And sometimes I also use the 8MA, simple moving averages. So this is the 8, 20, and 200, and like it respects it perfectly, you know. And it's also within this big red bar at the beginning, so you're chilling. You get that setup, which would have put you back up at a profit actually if you re-entered, but I didn't re-enter. So those are the takeaways from the first trade. Oops. What else we got? Let's go over the second trade, which was on coin. You can see I was trying to trade two at the same time. That might be an issue. We'll find out. But anyways, do the same old thing with coin. Before the day even opens, you mark out your points. So you got the 20. Yeah, you got the 200. You got the previous day close. Look about 45 minutes into the last day's session, last day's afternoon session. Mark out the lows, mark out the high, but the 200 in this case is higher, so you use that. Okay, so ideally, you know, the best position for a long is right above, but this isn't too far, you know. +1, this is like getting into +2. +2, I could still go long. So what am I looking for? Longs. So what do I get? First bar, red bar, I don't do anything. Next bar, I get this green bar taking out that red bar. This is how it looked. Full time, real time. Okay. So what I do is I enter right here, one lot at 82.79. Yeah, this bar is pretty massive, and coin has some pretty widespread. So a true event stop would have been 1 cent below 81.61, which is 81.60, but I got in at 82.79, so my max loss is $1. So I have to get out at 81.79. And sometimes these trades, you know, will reflect in the journal, but if I missed them, I probably shouldn't chase them. But in this case, I entered anyways. So let's see. Let's erase this. Let's draw out the trade. You know what? It's not even where I entered. 79, where is it? Like, pretty dang near the top. So 1, and then 79. I got out at 78. So this is minus 101 bucks. right here, 78. So basically I got stopped out in the same bar. Yeah, stopped out. Minus $101. Every trade we gotta identify NPR. Name. What did I enter on? Color change. Red takes out green. Position. +2 position. Above the Fab 4. Risk is questionable, but you know, I managed to get the risk around my max loss with some slippage and whatnot. So let's get this into the journal. Let's get a new slide going on. Boom. Boom. So what are the takeaways from this one? Stock selection. Coin is pretty spready, so it's hard to get like precise fills. So you might want to account for that in your risk calculations. Okay. What else we got? Make sure to have a proper event stop 1 cent below the low. So in this case, the stop should have been at 81.60. And my max risk is $100. So with one lot, 100 shares, the max latest entry point I can get in at is 82.60, right? So I kinda was late to this trade, but still jumped in. Beware of chasing trades. So technically, look, I did the calculation off the bar's range, okay? 82.60, 81.61. It's about $1. So I'm like, oh, I could afford this bar, right? So when this thing popped up green, I tried to hit it right there because it was supposed to trigger at 82.61, right? 1 cent above the high. But next thing you know, I get filled at 79. So like, what? You know? But, oh well. Still managed to get out at the max loss. But I think the identification of the trade itself wasn't bad. Location's not too wide yet. Alright, let's look at the next trade. which was let's see, coin again. So I waited for the pullback on coin, right? Because my entry comes maybe 10 minutes later, 43. But I think I'm also looking at the 5-minute chart. Yeah. So, you know, you could fill this gap in with, oh shoot, that's large. With like a green bar. This thing pulled back, and this is what I'm looking for, an entry off the retest on the MAs. But on the 5-minute, it pulls back to the 200, puts in this beautiful 180 red, immediately taken out by green, right at the 200. So I'm like, dang, that's beautiful. So what do? At 43, 81.52 is my entry. 81.52. Let's see. 81.52. Yeah. Okay. So sometimes I don't exactly wait for the full thing to get taken out. I get out just like right on the when the body gets taken out. So I enter there with one lot, 100 shares, and then I have my stop a buck down. So I'm in at 81.52. I have my stop basically below this green bar, 80.50ish. Okay, looking solid, looking solid. And then this also coincided with the 2-minute 200, but I was really taking the signal off the 5-minute. And then, you know, it goes my way for a bit, so I'm looking for an ad. Okay, within this bar, what is the psychology of a wick is it came back. So this part is red right here. There's a red bar right there. And the way this thing closed was green. So that's basically a hidden color change. So I added right there 2 lots. You could see this on the 2-minute, okay? Look. Boom. There's the 2-bar red pullback entry, stop. And it obviously triggered over the top. It did. It most definitely did. But let's see. Paste that. Erase that. So I added around 81.8. Yeah. Pretty much right when it took it out right there. And then that put my average price at, let's see. See, this is my downfall because normally I add and then it averages the price up, and then my stop, in order to respect my max loss, I have to pull up the stop tight into an area where it might not be the best to get stopped out. So that's the problem that I need to fix. Let me calculate. So my average price is around 81.70, and I have 3 lots, so I could only lose about 33 cents on each. 81.37 is where I could have my stop. And I'm pretty sure I lost decently bigger than on this, because I got out at 26. So I'm assuming this is what I did, or not assuming, but this is what I did. put my stop up above where I added, right here, and I get stopped out by this bar. Okay, that's the trade. So what did I lose on that exactly? 52. I bought at 52 minus 26. Lost 26 on one lot. 80 minus 26, lost 54 on the other. 79 minus 26, 53 plus 54 plus 26. Yeah, so this one disrespected the max loss. So this was a violation. That's why you gotta calculate your ads precisely, because they could be an issue. Like this adds up. 33 out of 100, I over risked by 33%. That's a lot. Alright, let's go to the takeaways. Put this on. Okay. So, takeaway of this, again, calculate the ads carefully. Don't just do it randomly. And then you have to find out that max loss resides above a support area that you could have used to your advantage. So what do I mean by that? This is what I mean. See where my stop had to be pulled up here? When I added here 2 lots, my average price got dragged up. I had to move my stop here. Even below this was a violation of my $100 max loss per trade, because we calculated that my max loss had to be at 81.37. The low of this bar is 81.30, and I'm supposed to have it at least a cent below 30. And look at the location of this thing. The 200 is right here. You know, this is supposed to save me my stop. I should have a max loss stop below this, so that if it does bounce back and test to hold support, I'm chilling, because I'm like, just from, you know, probability and over a long term, this 200, this flat 200 should retest most of the time and hold as support. So why am I stopping out right before it even gets a chance to retrace back? You know, doesn't make sense. But the only reason I do that is because I add, and I have no other choice but to manage my risk and pull my stop up. Because look, if I'm adding 3 lots here and I let this thing run, that's called not cutting your losses. That's what that's called. And as you can see, it didn't turn out well because it stopped out. So if I was holding 3 lots up here, from up here, and let that thing run, oh boy, that loss would have been massive. So in a sense, my risk management here was good, but the ads were unnecessary because I had to pull up the stop to a place that didn't make sense. Like, there probably shouldn't have even been an ad, to be honest, because I was already risking $100 on the initial with the stop here. If I'm adding here, no way in hell will I be able to maintain this loss, this stop here? Because now I have two lots at basically the same price that need to risk only 50 cents each. I would have to like pull this up to here, bro, which is still not ideal because you got the 200s help right here. Why are you stopping out right before? You gotta have your stop under. But it's okay. We learn our lessons. Yeah, probably shouldn't have been an ad. To be honest, there probably shouldn't have been an ad there. Stop was good where it was below the 200, and that was with one lot ready. It's just pure common sense that adding one lot above would lead me to pull in my stop tighter above 200, where I'm more likely to stop out. And it's pretty obvious this trade was a violation of my max loss per trade of $100. So that's the price we pay to learn. Okay, next trade. Coin. See, I keep trying to work this long because I think it could work, you know. It's in a location where it could possibly work. You got this, so I'm looking back at the 2 minute now. The 20 is coming, catching up, rising. Flat 200. I get another beautiful sign. Look at this beautiful wick right here. Okay. This beautiful tail. What is it? What is it telling you? It's telling you it used to be this red, but this red couldn't follow through. In the same bar, it wipes out this red and puts in its own color, and that's how it made that tail. So from there, I enter over the top at 81.38. Not exactly over the top, but close enough. Boom, one. Let me guess, max loss, 81.38. I had my stop at 80.38, probably. Yeah. This trade is less probable. Let me tell you why. The reason why is because before it was clear of the 8. Now the 8 is turning flat. The risk to reward into that next resistance is not nice, because you enter here with a stop here, you're met with resistance pretty damn much right here. So this is your reward, this is your risk. So I'm not gonna lie, you know, position was good, tail right off this and this, but it was going into an overhead 8, right smack into an overhead 8. And the problem with that is you should just wait until it clears over the 8. Be patient, and then take a trade once it's clear of the 8. What you got here? Boom. But I remember what I did. I went to trade Amazon again. And at this point, I'm down like 330. I have $70 to risk because my max loss per day is $400. $70 to risk. I can't even afford the $1 loss. I could only afford a 70-cent loss. And then I go over to trade Amazon. So I have to choose one or the other. So I remember what I did. It should have been a max loss, but realistically I couldn't even afford the max loss because I only had 70 cents left to go, or $70 left to go. So into the hook and 8, I'm like, this needs to go, or I'm cutting it. So I put my stop here below this candle, right? Because I get out at 38. Wait, no, 18, which is below this candle. So that's a $20 loss. Alright. Takeaways. Make sure the risk to reward going into any support or resistance is ideal, at least 1-to-1. And you want at least 1-to-1 because once it's 1-to-1, you could potentially break even. And if it pops up, and your trade keeps going. If not, you pull your stop to break even, and you get out at a free trade, no loss. But in this trade, I pretty much went right into the overhead 8. So the risk to reward was not attractive. Okay. On another note, I need focus. I was trying to trade 2 stocks at the same time with $70 of risk left to go. I need to pick one or the other and focus on the quality of this setup. Otherwise, I'll die by 1,000 cuts. You know, there's 2 ways you could die. Bust, where you just don't cut your losses, you lose in one trade, everything. But if you take multiple losses, multiple little losers, you'll die by 1,000 cuts, because if you take quantity of trades, but they're not really quality, like you could still just, over all of the trades, you could still lose a majority of them just because they're not the best setup, and from there, like you still end up at the same loss, So like, it really doesn't matter how you get there at that point, because you got to the max loss. So just be careful there. And then what else do I have to note? So the risk to reward going into the overhead resistance, overhead 8 in this case, and then just the focus. Pick one stock, focus on that. Focus on the quality of the trade. Yeah. Another thing is $70 of risk. Realistically, I couldn't afford this trade, yet I still took it. Make sure not to do that in the future. Calculate the bar's range, and if it fits and it's a valid setup, take it with no hesitation, no reservation. But if the shoe doesn't fit, if the shoe don't fit, the trade ain't yours. Wait for another opportunity. Be patient. There are always opportunities. And then the last trade of the day, I believe, is Amazon. I think I tried something on the 5-minute on this one. 2 lots at 41, huh? Yeah. Right underneath this bar right here. So this bar was red. 8MA catches up, gaps down, bearish momentum, gets the pullback. 8 is caught up. So I'm triggered underneath this bar, 2 lots. Stop right there. And just no follow through. Name, CC, position, declining 8MA, risk. I would say my risk no good this time. I'll explain. It's the same thing again, because I only had $70. I couldn't risk the proper amount. 72. So look, I could have my stop underneath the signal or above the signal bar 1 cent at 91, or above an alternate stop above the entry bar at 79. I got out at 72, which is short, you know. 79 is a true invalidation point, or even 91. But I'm getting out at 72. That's like cutting it 7 cents short. You know, a lot of fakies could happen in that 7-cent range, and it could have gone my way. And what's the psychology behind that? It's like I end up getting stopped out, wicked out, and then the true invalidation point above 78, 79 never gets hit, and then this thing could have tanked. In my head, what am I thinking to myself? I'm thinking, dang, I should have just went with 1 lot. I should have just put it right above the bar, this and that, you know? And in my head, it's not good for my psychology, because simply because that, like, I didn't do the right thing. And I should have done the right thing. Did I take a picture of this yet? Oh shit. So takeaways from this, I would say this is a valid trigger and pattern recognition. Good position right on the declining 8, but risk in this case is no good, because at this point I really only had 70 bucks to risk, not 100 anymore. So I shouldn't be calculating as if I had 100 to work with. So in this case, look, signal bar 90, 42. So what's the range there? 90 minus 42, 48. Yeah. So on a normal $100 risk, I could afford 2 lots, because I would basically risk 100 bucks. But since I only have 70 bucks, the sizing was off. Should have been a 1-lotter. Sizing was off. Should have been a 1-lotter. To stay within the 70 buck limit. Since size was too heavy, I had to resort to a tighter stop again, which leads to less probable trades, because I have to put the stop before the true invalidation point of my trade. What does that do to my psychology? If the trade ends up nicking me out at the tight stop, but never truly invalidates the trade setup at the proper stop, I would have had regret and FOMO sitting through the move going down. Basically, just size properly so that I could put my stop, so that I could place proper stop. And if it invalidates completely, it wouldn't take such a hit on my psychology. Yeah, simple like that. 1 lot here, 1 lot here. I could have afforded a full stop. It would have stopped me out anyways in hindsight, but look, this is where the trade truly gets invalidated. So I want to think, oh, this trade's gonna go without me. But while I'm sitting here with the tight stop, this thing could have poked above, not fully take out the stops here, and then drop, 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 and I'm over here sitting banging my head thinking, dang, I should have done this properly, this and that. So just size correctly, and yeah. So let's see, calculate the loss for this one, which was 72 minus 41 times 2, $62 loss, minus 62, and yeah. Alright guys, we'll continue reviewing and journaling just like this until we hit profitability, and then you guys would have followed me through my journey. Hope you guys do the same, sit here and reflect. Don't just trade mindlessly. Every day you could trade. Oh, you realize you make a $400 loss. Next day you come in, or the day before you shut down your platform, you go watch Netflix, you go eat, whatever, but yada yada yada, right? And then next day, without doing any work, like I don't know how long that took, but it wasn't too long, okay? If you're not willing to put this work in, and you're willing to make a salary greater than a doctor's in a couple years trading stocks and whatever, like you don't want to put in the work, but you want to make X amount, like that's crazy. You got to put in the work. So, after hours, outside of trading hours, make sure you put in the work, reflect, journal, and then after that, let it marinate, go watch your Netflix, and then go review your journal again. Before the trading day starts, maybe, you could put some time in, review your journal, and that's how you make use of not mindlessly trading. That's how you build consciousness and awareness. So you trade, you journal, coming into the next day, you review your journal so that you could see the patterns and behavior of yourself, and then coming into the new day, you don't do that anymore. That's how you gradually improve. So yeah, see you guys tomorrow for the same journaling session, review session. Peace.